Today we will continue the best strategy series in which I research dozens of indicators for various purposes like entry or exit signal, baseline, momentum or trend filters and more to find the best ones. Today I'm excited to bring you the part 2 of the best stop loss video. In part 1 I backtested fixed stop loss methods only, like the ATR-based, swing low swing high based, percentage based and many more. If you missed it, you can check it out using the link in the description or the pop-up in the top right corner. This time we will explore how trading stop losses perform. In my opinion, trading stop losses will easily outperform fixed ones. Before completing the backtest, I was sure that the best trading stop loss will be the ATR-based trading or fixed stop loss. These are my go-to and preferred stop loss methods. But surprisingly, that's not the case, so make sure to watch the full video to find out which is actually the best stop loss to use. Just like before, my backtesting, sorting and ranking methods will be objective, rules-based and as fair as possible to ensure the results are useful and applicable to any trading strategy. Since I've already explained my backtesting, ranking and sorting system in previous videos, I won't repeat it again. Instead, I will focus on only the differences, what's new, what I'm testing and how I'm analyzing the results. If you're curious about the full backtesting, sorting and ranking system, check out the first part of this video. So in this video, I will walk you through the new trading stop loss methods I tested, highlight any changes in the backtesting and ranking process, and of course reveal the results, the best stop loss methods overall, as well as the top performers for specific assets and timeframes. As always, you can support me on Patreon and you can buy the full research data plus 7 scripts bundle if you want to take a deeper look in this research. Or if you want the source code of the stop losses I tested to implement them in your own trading systems. You can find the Patreon link in the description. Without wasting any time, let's get right into it. First of all, for those who don't know what's the difference between a fixed stop loss and a trading stop loss, let's quickly go over it. On the left side you can see an example for a fixed stop loss and on the right for a trading stop loss. Let's say we would have entered into a long position right here and we placed our stop loss right there. This stop loss will be a fixed stop loss, meaning it will remain at the same level throughout the whole trade until the price either hits the take profit level or the stop loss level. In this case, it hit the stop loss right here and that resulted in a losing trade. On the other hand, if we are using a trading stop loss, we still enter into a long position at this level, we place the stop loss right here just like with the fixed stop loss, but then as the price moves up and up, we are moving our stop loss accordingly, meaning in case of a long position the stop loss can only go higher, and in case of a short position the trading stop loss can only go lower. This stop loss method will lock in the profits or limit your downside, and as you can see this trade also hit the stop loss, but as this was a trading stop loss and it constantly moved up with the price, the trade actually was a profitable trade. Moving on, to find out which is the best trading stop loss, I coded 7 pinescript strategies, one for each stop loss with ChatGPT. Now these coded strategies are as simple as it can get. It uses one entry signal indicator, one stop loss and one exit signal indicator. For the entry signal indicator, I use the mid-tier indicator, meaning it's not the best, it's not the worst, it is somewhere around the middle. And that indicator is the squeeze momentum. Now, why I choose the squeeze momentum instead, for example, the super trend, which is one of the best? Well, if I want to test a stop loss effectiveness, I want to see how it can handle both good entry signals and bad entry signals, so that's why I went with the middle option, the squeeze momentum. For the take profit, we will use a simple ATR multiplier based fixed take profit, and for the stop loss, we will test all of the stop losses I will go over in just a moment. So again, in the first part of this video, I tested these stop losses and they were all fixed stop losses. Now I took these stop loss indicators and tested most of them as trading stop losses. So I tested an ATR-based trading stop loss, a pips or ticks based, an adaptive percentage based, a Donchian channel based, a swing low swing high based, a moving average based and a Bollinger Bands based. Now with the last two you can see that they are partially disqualified. And I will explain in a moment why is that. Here you can see all the settings that I will test with each different stop loss indicators. Keep in mind that not all combinations will be tested. I will use a random testing method, meaning I will test a random 20% of all of the combinations. This will give us a statistically significant result, so we can decide which is the best stop loss indicator. Just quickly go over one option. For the ATR trading stop loss, I will test a multiplier of 2, 4, 6 and 8 randomly, and the ATR length will be set at a fixed level. For example, on the swing low swing high trading, I will test the 10 candle look back, the 20 candle look back, the 30 candle look back, and the 40 candle look back. And so on and so on. To do the backtest, I am using a strategy optimizer extension that will automatically change the parameter settings and download the backtest results. Here you can see all the assets and timeframes, entry and exit conditions I will test. And here are the fees I will use. There are also some other rules. The backtest will be done on the last 4 years of price data, starting from the 1st of March 2020 and ending on the 1st of March 2024. And here is the one thing I changed about the backtesting method. The trade count limit is now different. So I actually researched the number of 30-minute candles for each asset in a given year, and the trade count limits will be set accordingly in proportions. But why I did that? Well, the crypto market is open every day, all hours of a day, while the stock market is only open on weekdays and only for 7.5 hours. And it also excludes holidays. This means that in a given year, BTC/USDT will have more candles than, for example, Microsoft. So if I set a 100 trade count limit, for example, on the 4-hour backtest results, it is not totally fair, as Microsoft had much less candles to get those 100 trades compared to Bitcoin. So I did the calculations. Here's a quick screenshot of that. And these are the trade count limits I will use. For Microsoft, on the daily chart, at least 10 trades, on the 4-hour, at least 20 trades, on the 15-minute, at least 200 trades. On BTC/USDT, on the daily chart, I want to see at least 14, on the 4-hour, at least 87, and on the 15-minute, at least 1,390 trades. And so on and so on. Now here's a quick screenshot of the sorting system. Again, if you are interested in this, check out the previous part of this video, there I explain it in detail. And here is the ranking system. Now with that out of the way, now let me quickly show you all the stop loss methods I will test. Okay, we are now here on TradingView. This is how an example script will look like. It's made for the Donchian channel trading stop loss. Here is the entry signal settings, the Donchian channel length itself, and the take profit settings. On the bottom we have the trade direction limiter. The first stop loss is the trading ATR stop loss. For that, open up the indicators tab and type in NNFX ATR. Add this one to your chart. That indicator will look something like this. The X value is the period or its length, the TP value is the take profit multiplier, and the stop loss value is the SL multiplier. As we are now testing this as a stop loss indicator, we'll focus only on the SL and the X value. As mentioned earlier, the X value or its length is set to 50 and will be kept at 50. And for the SL we will test 2, 4, 6 and 8 values. For this example, let's go with 2. In the styles tab I untick the buy TP, the sell TP and the main ATR as we won't need that, and change the line styles to step line. Now going back to this example, how would this trade play out? So once the position is opened, the stop loss is placed here. But as we are using this as a trading stop loss, we will move the stop loss up whenever the ATR band moves up. Here it was below the original stop loss, again still below, it's still below, and all of these are below. But on this candle, as the price moved up, the lower NNFX ATR band also moved up, so we are moving our stop loss up with it. The new stop loss will be here. Now again, on this candle, we get another higher stop loss. That's why we will move our stop loss higher a bit again. And here we get another higher stop loss, and we move our stop loss there. And this goes until either the stop loss is hit or the take profit is hit. Now in this specific case, we will move our stop loss higher again here, then again here, and again here. But on this candle, the take profit level would have got hit, as you can see. So this would have been a profitable trade. Now the rule is the same for shorts, just we are using the upper bands and we are moving our stop loss constantly down. Let's move on. What is the next stop loss? The next stop loss is the pips/ticks-based stop loss. For that we won't need any extra indicators, so let's hide the ATR and let's delete these. Okay, the pips/ticks-based stop loss is generally a stop loss that is based at a set pip distance or tick distance from the entry price. For this stop loss, go to the left side and click here and click on the date and price range tool. Let's say we want to use around the 400k tick stop loss. So we will move this price and date range tool until we reach around 400k. You can see that right here. And we will paste the stop loss at that level. Now whenever we get a new candle, we can again measure that 400,000 tick distance. And if it's higher than the previous distance, in case of a long position, we will update our stop loss accordingly. Now I can tell you that the first time that will happen is on this candle, as on this candle we get a higher price than the entry level. So let's measure the distance on that candle from the close, and the 400k level will be around here. Now that means our new updated stop loss will be placed right there. The take profit level will remain at the same level. On this candle we will get another higher level for the stop loss. So let's measure again from the close, and our updated stop loss will be around here. So as you can see, this is a pretty simple stop loss, but it is hard to monitor manually. Now this will go on until either the latest updated stop loss gets hit or the take profit level gets hit. Moving on to the next stop loss, the adaptive percentage-based stop loss. Now with this one, without going into detail, this will work similarly as the pips/ticks based stop loss. I will be using a percentage distance, but that percentage distance is adaptive for each time frame and each asset. So you don't have to calculate it manually what is the average percentage distance to put the stop loss. If you want to learn more about this adaptive percentage-based stop loss, just check out the part 1 of this video. Moving on, the next stop loss is the Donchian channel. For that, open up the indicators tab and type in Donchian. Add this one. I already did that, and here it is. The Donchian channel will have a line just like this one. And let's say we have a valid entry signal on this candle. In that case, we enter here, and we will paste our stop loss at the lower Donchian channel. Now the Donchian channel has a basis line too, and an upper line. In case of a long position, we will only use the lower line, and in case of a short position, we will only use the upper line. The basis is never used. Now how this works is pretty simple. In case of a long position, whenever the lower Donchian line moves higher, like here, we will update the stop loss to that level. In case of a long, we can only move the stop loss up and never down, and in case of short, we can only move it down and never up. So let's say we keep the trade open for a very long period, then our Donchian stop loss will be here, then it will move up to this level, then right here, and so on and so on. The next stop loss will be the swing low, swing high. This is now a bit more complex stop loss. Let's take a quick look. For example, on this entry signal. We enter into the position here. And let's say this swing low, swing high stop loss has a look back value of 10 candles. Now what does that mean? It means that the script will look back 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10 candles. In case of a long position, it will look for the lowest point out of that 10 candles, and that will be here, and it will place the stop loss right there. Now this last 10 candles low will be recalculated on each new candle, so on this candle it again looks back for the last 10 candles and checks where is the lowest point. Now the first time the stop loss will get updated will be on this candle. Why is that? Well, now if you count back 10 candles, 1, 2, 3, 4, 5, 6, 7, 8, 9 and 10. This is the 10th candle, and the lowest point out of this 10 candle will be right here. And that means that we will move our stop loss to that new lowest level of the last 10 candles. And as you can see, that updated stop loss got hit right there. So technically on each new candle, the script will calculate back the set number of candles, looking for the lowest point in case of a long position, or the highest point in case of a short position. Moving on, the next stop loss is the moving average based stop loss, which is partially disqualified. So let's talk about that a bit. So for that stop loss, I am using the SMMA or the RMA. Open up the indicators tab and type in SMMA. The SMMA and the RMA are the same, they are just named differently. Add the smoothed moving average to your chart, this one. I already did that, and here it is. I set it to a 50 length, so now let's use it with a 50 length. And let's say, for example, this is a valid long entry signal. Then we will enter into a long position here. The stop loss will be placed at the moving average, right there. And on each new candle, we will update the stop loss to the latest level of the moving average. So for example, on the next candle, the stop loss will be somewhere around here. And on the next candle, it will be even higher. And on this candle, for example, it will be now at this level. And just 2 candles later, that level got hit right there. Now keep in mind the moving average can move lower, but we are using this as a trading stop loss. In case of a long position, we only allow the stop loss to be moved upwards and never downwards. And in case of short, we only allow the stop loss to be moved downwards and never upwards. Simple as that. Now why this stop loss is partially disqualified? Well, it's all good until the long entry level is above the moving average, or when in case of short position, the entry level is below the moving average. But what happens if a long entry signal level is below the moving average? That's the case right here. Here we get the squeeze momentum turn from red to green, or the squeeze momentum cross up, which is a long entry signal. But the close of that candle is under the moving average. So now where we place our stop loss? We can place the stop loss above the entry level. And as the moving average is not below the entry level, there is no way we can place a stop loss. So in this case, what the script will do, it will close the trade immediately as it recognizes the stop loss to be placed here, and that is triggered as soon as the trade is opened. This means that when you are using a moving average based trading stop loss, you are not only using a simple stop loss indicator, you are also using a trend filter indicator. Because whenever we get a long entry under the moving average, it will get closed immediately. So considering that, the moving average based trading stop loss has already have an advantage over all the other stop losses that we are testing. Because using an extra baseline filter or trend filter is obviously a big advantage. Now the final stop loss is the Bollinger Bands based stop loss. For that, open up again the Indicators tab, type in Bollinger Bands, and add the built-in one, this one. Now the Bollinger Bands will look something like this. It has a baseline which is just a simple moving average, and a line above and below. Now I think you can guess at this point how we will use it. In case of a long position, we will place the stop loss at the lower Bollinger Bands, and we will move it only up when the Bollinger Bands moves up. So let's say we entered into a long on this candle, the stop loss will be placed right here, and it will remain at that level until this candle when the Bollinger Bands lower level moved up. Now the stop loss will be placed around here and will remain there until again the Bollinger Bands moves up. And that goes on until either the stop loss or the take profit level gets hit. Now again, just like with the moving average based stop loss, as this indicator has a middle basis line and as the starting point for the calculation of the upper and lower Bollinger Bands, it can easily occur that we are entering into a long position when the Bollinger Bands lower line is above the entry level. Let's find an example for that. Okay, it happens rarely, but let's say this candle would have been a long entry signal. If that's the case, this is the lower Bollinger Bands line, and this is above the entry level. And as we can place the stop loss above the entry level in case of a long position, the script will close automatically this trade as soon as it opened it. So that's why the Bollinger Bands is also partially disqualified. Okay, we went over all of the trading stop losses I will test. Now let's get back to the video. Okay, are you ready for the results? Let's see. So here you can see the absolute top 3 best results which I got considering the profit factor. Now keep in mind, these results are not so important because this is just the top 3 and not the overall best stop losses. But at the first place we get the PIP trading stop loss on the BTC USDT 4-hour chart, generating a 1.64 profit factor, and here you can see all the other settings. The second place also goes to the PIP trading stop loss, and the third to the ATR-based trading stop loss. That was used on the US 30 4-hour chart, long positions only. Now we have what we are really interested in, the best trading stop loss indicators overall result. Here you can see only the indicators that I've tested in this video, but don't worry, on the next slide we will compare the part 1 results to this one too. And based on my backtest and calculations, the overall best trading stop loss indicator is the moving average based trading stop loss. Keep in mind that this stop loss is partially disqualified, and I mentioned it before why, so take this result with a grain of salt. The moving average based trading stop loss got a whopping 1,300 base points, 2,377 weighted points, with a combined points of 1,845, and the average rank, of course, is the first placement. Now the second trading stop loss is the Donchian trading stop loss, and this is not disqualified at all. So in my opinion, but this is just my opinion, the real winner here is a Donchian channel based trading stop loss. This stop loss got 746 base points, 1,273 weighted points, and 1,009 combined points. Closely followed by that is the ATR-based trading stop loss, which was my preferred stop loss until this point, but based on these results, now I will be focusing on the Donchian-based stop losses more. This doesn't mean that I won't use an ATR-based trading stop loss anymore. I really like that stop loss, but I will be taking a move towards the Donchian trading stop loss. The ATR-based trading stop loss got a combined rank of 3.5, which is not bad. But if you take a look on the upcoming stop loss, which is the Bollinger Bands trading stop loss, it got the same rank. So these two stop losses are at the same level, but again, the Bollinger Bands trading stop loss is partially disqualified for the same reason as the moving average base is disqualified. Now at the bottom, the last three placements goes to the trading swing low swing high, the trading percentage adaptive based, and the trading pips/ticks based. Now I was surprised about the percentage based one, because I think it got a pretty good placement when we used it as a fixed stop loss. Moving on, here is the summarized overall results of the best stop loss indicator part 1 and part 2 video. Considering both the fixed and the trading stop losses, the best overall trading stop loss is the moving average based trading stop loss, followed by the fixed moving average based trading stop loss, and then comes the Donchian channel based trading stop loss, the ATR based trading stop loss, and then the Bollinger Bands trading stop loss. In my opinion, the best stop loss overall is the Donchian trading stop loss. It is placed to the first tier. In the second tier, you have the ATR-based trading stop loss. In the third tier, you have the swing low swing high based trading stop loss, then the adaptive percentage based, then the pips/ticks based trading stop loss, and then at the bottom, all the fixed trading stop losses. So what are the takeaways? If you want to use a stop loss, I would recommend using anything from the dark green or the light green sections. Those probably won't give you bad results. You can also choose anything from the yellow boxes. These are mid-range stop losses, but I would likely avoid these sections, which is in dark red and light red. In the comment section, let me know which stop loss you've been using so far, and if you have heard about the Donchian channel used as a stop loss before. And to close out this video, let's take a look on some extra statistics. If you want to use the BTC/USDT, the best stop loss for that was the Donchian trading stop loss. For Euro/USD was the moving average based trading stop loss. For Microsoft, the ATR-based trading stop loss. And for the US30, the moving average based trading stop loss again. All of the best stop losses are trading stop losses, which is not surprising at all. And keep in mind that this result is based on the profit factor values of the top 10 results. If you want to trade on the 15-minute time frame, based on these results, I would recommend using the fixed Bollinger Band stop loss. If you want to trade the 4-hour, the best results came from the percentage-based trading stop loss, and on the daily, the moving average-based trading stop loss. And that wraps up today's video. If you want to see more videos like this, don't forget to like, subscribe, and turn on the notification bell. And if you want to get the full backtest, sorting and ranking data alongside with the 7 pinescript strategies I used to complete this research, check out my Patreon shop. Or if you want to get access to my best, highly customizable strategy scripts made for trading automation and to 52 optimizations, become a Smart Trader tier member. These optimizations are mostly made for crypto, but you can find a few for stocks, forex, and lately I've been getting into futures like ES and NQ. Let me know if you know other stop loss indicators or methods I should test in the comment section, Actually, I was thinking about the move stop loss to break even method, as that's also pretty popular and could be another viable stop loss. As always, thank you all for watching, have an amazing day, and until next time, trade smart.